welcome everybody. So we are here today with Kathleen Reaume, and we're going to be learning about so many incredible juicy things with Kathleen that she's going to dig into a little bit more. But in case you aren't familiar with Volition, I wanted to do a hi there and hello. I am Melanie Ewan. I am a co-founder and one of the managing partners of Volition, and we are an international advising firm. So we have 11 different advisors who specialize in a different kind of common pain point or knowledge gap in the entrepreneur journey. Kathleen is one of those advisors, and essentially we started these AMAs back in April to be able to connect with you, our community, as well as to learn with each other and to answer some of the top questions that we were getting from people and that we continue to get from all different kind of areas of our community. So how is this going to play out? Essentially, in just a moment, I'm going to pass the reins to Kathleen, and she's going to introduce herself and talk about her topic a little bit before we get into Q&A. And then it's going to be a very conversational kind of interview style event here. So I'll be asking questions and Kathleen will answer. So if you put your questions in the chat box, or you should also find a Q&A button at the bottom of your Zoom screen. So you might need to take your mouse down to the bottom of your screen to see that. It should pop up. So you can also submit questions for Kathleen there, or for myself if you want to. And I'll be monitoring that, and I will pass those to Kathleen as the next hour unfolds. The session will be recorded, as I mentioned, and it'll be shared. So we welcome ongoing dialogue and questions. So if you walk away from this and you didn't have your chance to ask Kathleen something, or something comes up tomorrow that you want to ask, please do still send those our way, and we will make sure to take a look at them and get back to you. And this is also being recorded and live streamed on Facebook. So you can also head there to our Volition Advisors /live, and you can see this once this is done and submit your questions there as well. Alrighty, so that's enough from me. Oh, actually, before I say that's enough from me, I also wanted to direct your attention to the bottom of the screen here. So as I mentioned, Kathleen is one of our advisors, and she's going to be talking about capital and cash flow today. You can check out her profile on pickmybrain.world. It's a really cool platform that we used, is owned by Maxine here in Vancouver. In Vancouver, she's a founder in Vancouver. I still think I'm in Vancouver sometimes. It's really incredible. Check it out. Check out Pick My Brain. Also check out Kathleen's page on Pick My Brain, and you can talk to her there. You can also connect with her on LinkedIn, and that is the right link. It's just a different last name. So it is correct, I promise you. Alrighty.
I got married, so it's a bit confusing. We're in the awkward name change.
I know. Yeah.
It is me. Rest assured.
If you just put in Kathleen Reaume into LinkedIn, it sometimes doesn't quite come up. So check out this link, and I'll put it in the chat box as well. Kathleen is one of our advisors. She specializes in helping companies successfully scale, but there's so much more that you can pack into that. And what I want to do at this point in time is hand over the reins, and Kathleen's going to introduce herself and a little bit about this topic. I will stop sharing so you can see her face better. There we go.
Perfect.
Over to you.
Thanks, Melanie. Appreciate the introduction, and hi to everyone who's joined. It's great to meet you. To kick it off here, I thought I'd just give a brief introduction on my background. As Melanie shared, I'm part of the Volition Advisors team, and I'm thrilled to be here on the backs of other successful AMAs that my fellow advisors have done. So excited to be here. I think my background hopefully leads to interesting insights on this topic. It's near and dear to my heart. I currently work as a technology investor at Vistara Capital. It's a growth capital firm here in Vancouver, and we're focused on investing in enterprise software companies and providing flexible growth capital solutions to companies both in Canada as well as the US. So spend a lot of time looking and evaluating different business models. But actually, prior to that, started my career in investment banking in New York at UBS in the consumer products and retail team. Spent a lot of time working with companies to prepare for and then IPO, also M&A activity. And as I was doing that, I realized I was building a lot of models, but really became curious. How do you grow sales by 20%? How do you drive a 5% improvement in gross margin? And realized I love the advisory work, but I wanted to get my hands a bit dirtier, and thought no better place to do that than a startup. So actually the majority of my career has been as an operator. I spent the last 8 years prior to joining Vistara as an operator at 2 tech companies in New York. The first one was ZocDoc. It's a company, a healthcare company. And while I was there, I was an inaugural member of the finance team, led all of our capital raising efforts, as well as really taking our business model throughout the US, scaling from an outside sales team to an inside sales team, moving from a B2C model to a B2B model, and really diving into all of the pain points that come with high growth organizations and how to navigate that, how to pivot to profitability. I then left and was the chief kind of strategy officer at a company called MealPal. It's a food company. And my role there as chief strategy officer was really taking that model internationally, figuring out how to localize business in different geographies. Also led all of our capital raising efforts and also our product org. So my goal is to kind of really share insights from both sides of the table. I've raised capital, the $100 million plus growth equity rounds to raising smaller debt rounds, been on the other side negotiating with investors and sharing information, sharing the story. And now obviously today I'm now deploying capital. So I'm hopeful that those experiences will lend well to a fruitful conversation today. I think a few opening a few opening remarks here, and then I'll kick it back to Melanie for some specific questions. But I think that, I've been thinking a lot about the current environment. I think even more so than the financial crisis of 2008. In current times, there's a pervasive sense of uncertainty. And I think that's really hard. I've been thinking a lot about my favorite business book, which is very topical right now. Even in good times, it's my favorite book. But the book is called The Hard Thing About Hard Things by Ben Horowitz, who is one of the co-founders of Andreessen Horowitz and arguably one of the most respected investors in Silicon Valley and renowned entrepreneur. And you should read it if you're curious about pulling back the curtain and kind of what it takes to build a company and the hard decisions you have to make. But the main takeaway from that book is really the hard thing about hard things is that there are kind of no easy answers. There's no precedents to look at. There's no formula. There's no playbook. And that's what makes it hard. If there was, it wouldn't be hard. And so I think all of us are dealing with hard things right now in one way or another. But I keep reminding myself that, crisis creates opportunity. And for businesses, the current environment serves as an incredible catalyst for change. There's one kind of quote that I love, and it's from a Stanford economics professor, Paul Romer, and he said, "A crisis is a terrible thing to waste." And I just love that. I think, in my mind, I keep coming back to that as a silver lining. I think, the reality is the current environment very much creates crisis, and, no way am I trying to downplay the hardship that comes with that. But I do know that coronavirus and the environment is and will continue to serve as a catalyst for entrepreneurship. And, to me, that's exciting because what I see both as, as an operator and as an investor, that in good times, I find that companies aren't necessarily playing to win. They're not always playing offense. They play conservatively. They want to be cautious. They don't want to lose that revenue stream. They don't want to lose that customer. And so they take fewer risks. They're playing not lose. They're playing defense. And today, everyone is playing to win. They have to play offense. Survival depends on it. And so I think what we'll see is there's an incredible opportunity to innovate. There is no business as usual. There is no comfort zone. There is no routine way of doing things. And that creates a real urgency and appetite for experimentation and doing new things. And so crisis focuses companies, it forces hard decisions. But I think what we've seen time and time again is that after crisis, whether that was World War II, the dot-com bubble bursting, the financial crisis of '08, is that after crisis comes some of the most innovative times in business. So, we will get on the other side of this. I think the world as we know it and how we do things will change. And so I think companies that are able to adapt, this creates an incredible catalyst for innovation and trying to find the silver lining. But I think we'll see a lot of exciting things from businesses who now have the freedom to think differently.
Yeah, exactly. Yeah, I think it was in a previous AMA, I think it was with Colin McQuinney, and he was talking about all the different businesses that came out of the 2008 financial crisis, which I think, if I recall, Airbnb might have been one of them. I could be making that up, but you know, these kind of like big names that are our household names today, and they came out of these times of uncertainty, and like having to work harder, as you're
Yeah.
saying, and like not just be sitting back and even just focusing on the day to day. You know, I feel like right now we can't really focus on the day to day. We're thinking strategically, and we're thinking about what are our values, what is our why. Let's revisit customers. Let's figure out if we were actually headed in the right direction. Like, it's so much more active than pre-COVID, when it was kind of just figure out the day to day. So I really appreciate and hear what you're saying on that.
Yeah,
That the crisis is this opportunity, whether welcomed or not, not welcomed at all, but probably for a lot of us. I mean, I think for a lot of us, it'll be really transformative in the end, in interesting, unexpected ways. And I think.
and then, oh, go ahead. Go ahead.
No, I was just gonna kind of springboard off of that thought around the sense of uncertainty. But if you had a lingering thought for this piece, I'd love to hear.
Let's talk. Yeah, we can talk. Let's talk about uncertainty. I guess the other kind of positive of kind of observation I'm seeing as well is, I think, you know, undoubtedly it is harder, much harder to raise money in COVID times for sure, than kind of previously. But I will share that it's happening from personal experiences. You know, at Vistara, we are closing 3 deals, 3 investments in the month of May. We have a signed term sheet for another deal. You know, we've been busier than ever. And so, you know, I'd say investors are still deploying capital. We can get into what investors are looking for. But I'd say it's harder for a few reasons. And, you know, I think part of it is that investors, you know, many investors are focused on their current portfolios. So, you know, they're picking up the phone, you know, they're spending time with the entrepreneurs that they're partnering with, making sure that they're equipped and can be helpful in navigating times for their current portfolio. They're also, maybe some investors are reserving capital to potentially invest in their existing portfolio companies. So instead of kind of earmarking that capital for new investments, they're reserving it to potentially provide additional runway so that their current portfolio companies are successful and can get through this on the other side. But I will say, and I'm sure we'll dive into this topic. My guess is a lot of questions on that to come. But you know, it is harder, but it is happening. And I think investors are you know, seeing a lot of companies that will have interesting upside as they continue to innovate and we come out of the crisis. So it's harder, but I will share that it's definitely happening still.
Amazing. That's good news. And yes, that's the kind of springboard into one of the most common questions that we get at Volition. So we recently did a survey with our past pitch alumni and found that over 50% of our community are affected a great deal by COVID, or have been affected a great deal. And a lot of that had to do with people who were raising and things got put on pause, or they were wanting to raise or interested in raising, or that was kind of in their 6-month roadmap, and now are wondering, is this a good time? And if I got to the point where I've decided yes, because there's been a lot of conversations about this in the last 2 months, and a lot of people saying yes, people are still investing, that don't not do it right now, just think about it in different ways. I think a lot of people are thinking, okay, so if I'm deciding yes, what is the investor mindset during this time? Like, what can I expect, and what should I be thinking about today?
Yep. No, for sure. I think it's definitely a topical question. Say if you probably ask 10 investors that question, you may get 10 different answers, in that, you know, investors may have a specific investment thesis or specific hurdles in terms of metrics that they look at. So it's a bit different for each investor. But I guess what I'd say at a high level, you know, I really think of this as a 2-pronged approach in terms of what we're looking at. I think the first one is really business related. So, you know, are the underlying fundamentals of this business strong? You know, and I think the second is, what is the resiliency? You know, kind of what is the creativity mindset of the team? You know, I think both are important, and so I'll dive into a bit more of those here. But I think in terms of evaluating a business, I think if you're an established business, there are 3 main areas that investors will really be looking at. I think one is new customers. So have you been able in this environment to sign up new customers? I think the second is existing customers. So are you able to sell more to your existing customers you have today? Are they buying more? I think in terms of the last piece is just renewals. So also, are your customers who have contracts coming up for renewal, are they continuing to rebuy your products or services? And I think if you can answer a yes to all three of those questions, you're sitting pretty nicely, you're in good shape. But I think in this environment, it's probably, my guess is very few companies are still consistently answering yes to all three of those questions. And so, what I'd say the investor mindset is really kind of thinking about what is proof. I think investors are not looking for, hope or kind of, promise. I think they're looking for proof. And so, how do you communicate proof or traction when maybe you're not answering yes to those three questions? And so, what I say is look at your other data points, point to where there are green shoots. So for example, if you're not able to sign up new customers in the current environment, do you see good traction in your pipeline? So maybe you can communicate that, budgets are frozen right now, but your pipeline, your interests of indication are larger than it's never been. You have a huge backlog of business. So maybe, your pipeline is 2x what it was, last year at this time, or maybe the deals that you have in your pipeline, are much larger. And so I think there are ways where you can be creative and show that proof, show that traction, in other areas if there's not a direct correlation to how that is historically translated into outcomes. I think the other piece, in terms of communicating traction and proof to investors, is really scenario modeling. So as an investor, we're trying to protect the downside, we're trying to minimize risk. And so, being able to say to an investor, you've done scenario modeling, and even if you didn't sell another dollar for the rest of this year, where you could make adjustments in your business, where you would still have a profitable business, where you could make changes, the thresholds of sensitivity and where, where you have room to play with. And I think that's a powerful statement. I think that's what investors will do on kind of their side of the table, is really understanding, if growth didn't materialize, if customer churn increased, what business are you left with here? And so I think being proactive and communicating that definitely de-risks the investor mindset. And maybe, I know we have probably folks here who have businesses at different stages. And I think, I'm talking largely in kind of maybe larger businesses, but I think it's important to note that proof should be appropriate to the stage at which your company is at. So if you're an earlier stage company, maybe you're pre-revenue, you don't have customer contracts yet, there are definitely ways that you can communicate proof to your investor base. So for example, you don't have any customers yet. How do you still communicate traction and certainty to your investors? I think one way to do this that comes to mind is maybe through a survey. So, in COVID times, you've reached out to your potential target audience, your potential customer base, and you still have data on their willingness to buy a solution. It still solves their pain point. That need is still there. You surveyed their willingness to pay, and they're still willing to pay $100 or X number of dollars for your product. I think as an investor, having those data points is helpful and definitely shows that interest has been sustained, even as the business environment, the macroeconomic environment changes. You still have line of sight to solving a consumer pain point. And so I think there are ways that you can be creative for sure in how you show that traction. And then maybe the last point, I'll kick it back to you, Melanie, but I think it's an important one, is really evaluating the management team and the entrepreneur. I think sometimes that gets overlooked, but I think particularly in this environment, really looking for a management team and from an investor, looking for someone who can be flexible, who can navigate change. And on the other side of the table, if you're raising capital, how you can highlight that. But, I really think about this is, it's great to have an expert in good times because they're, presumably the best at what they know. And maybe that's building a B2C company with a digital first strategy, and they're absolutely the expert at that. But, I really think you also, investors think about, what is the range of someone? How can they be flexible? How can they adapt? And I always think about this. If you're in the trenches with someone, an expert will know the fastest and best way to get you out of a 4-foot trench with a wooden ladder when it's sunny out. but I don't know if it's going to be sunny every day. It might be raining. We might get a 12-foot ditch and there's no wood around. And so really thinking about, investing in a management team that can be resilient, that is, has conviction to pivot. And, as an operator, I've been there and it's sometimes hard. These companies are your babies. You're convinced that, the target customer, what their need is, how to reach them. And sometimes, as an operator, you may have some blinders on. And I think, being able to pause when you've been working at something for years and reevaluate in a changing environment is really important. And so I think, as an operator, I think it's, showing to investors how you can be resilient, how you can be creative, and how you can be the one to lead change when things are going on outside of your control.
Yeah. And there's something that you said to me recently, which I thought was really interesting, which was around that investors, whether it was during COVID or crisis or before or after, they're always going to be looking to this question around what would it look like if the world blew up and how would you handle that? And I loved that, like just even having that answer prepared. Yes, during COVID, yes, during as we go into recession, yes, but at any point in time, be thinking about that because you just don't know.
Yeah, I think for better for worse, maybe as an investor, you're a bit skeptical. I don't think anyone could have predicted with a crystal ball kind of what would happen, in kind of the beginning of the year and where we would be now. And I think, as an investor, you may not know exactly what that thing is, but you always want to have an answer to protect the downside. So yes, I think you should always be thinking about, we'll get through this crisis and hopefully we're good for a while. But if other things outside of your control happen, what's your contingency plan? And I think the key is having that and knowing that, because it allows you to react faster. And I think it really puts you on a whole different trajectory when things start to recover. And so, yeah, I think it's maybe a bit of a pessimistic approach in terms of what does the worst case look like. But I think there's some comfort and peace in knowing that you've thought through that and you know what you do and you know what that looks like. And I think understanding that is actually quite helpful.
Yeah. Do you have any examples by chance of companies you've seen that have been creative and have or showing that kind of resilience, or you ever already shown it? Like maybe these companies that you said you had 3 companies that your fund is investing in right now, or like anything to kind of give us like a tangible, this is what it looks like in a real life.
For sure. I mean, I think, right now there's potentially product innovation going on, but I guess even thinking, how can you be resilient in terms of, maybe I'll tie it into cash flow planning as well, because I think that's probably top of mind. But if you need to cut costs, for example, I'll give a few tangible examples. How can you do that while preserving enterprise value? And so, if I needed to reduce my comp line maybe by 25%, obviously layoffs are an option, reducing comp, but, there are companies that are getting creative, for example, and saying we need to reduce our cash pay, but, we'll incentivize our employees with equity compensation or options. And so they're getting creative in terms of how they're compensating their employees. For smaller companies, I've seen a lot of companies become very resourceful and looking for partners. So for example, if your company's at a scale where it's appropriate, I think, partnering with an accelerator has been an interesting strategy that I've seen a lot of earlier stage companies do. And what this means is, you can reduce your overhead. So a lot of the resources that accelerators have, whether it's HR, legal, PR, you don't have to pay for that out of pocket necessarily in terms of cash expenses. And so being able to partner, definitely is a creative approach to pivoting. And then largely, I think one of the key items, which I always think about and a big proponent of, is I call it thinking in the mindset of dual purpose assets. So in the perfect world, when business is going well and business is booming, there's less of a focus on, kind of squeezing everything out of an asset. But, when you need to really stretch, how can you think of dual purpose assets? And so one tangible example that I think about is, headcount. So maybe you have a sales team that, is less productive now in the COVID environment. How can you retool that asset? How can you make those team members still valuable in this environment. So I've seen
Right.
some companies have been using salespeople as a customer service engine for a company, which has been a
Right.
win-win because they are better able to service their customers. They're in closer dialogue with their customers, and the sales team is actually learning a lot more about the customer needs, their pain points, et cetera. And so, the company has been able to retool resources, and salespeople are still selling. They're trying to build the pipeline, but there's other ways they're able to leverage their resources that benefits both the company and as well as their customer base.
That's fascinating. Yeah, thank you. I honestly have not heard that term before, dual purpose assets. And I was like, oh, she explains this. So yeah, no, really.
It might be one that what I made up. And I guess the point is just that, how can you get the most out of the assets that you have today? And instead of singularly thinking about this person was hired or we're spending this dollar, in this way traditionally, how can you get the most for what you have today?
Yeah, for sure. No, completely makes sense. Yeah, I love it. All right. So we've had a question come in. I'm also going to mention too, I know we had we got some new people in here and on Facebook as well. So if you are new in the space, do introduce yourselves. You can head over to the chat, say hi, let us know who you are, where you're joining us from. You can either use the chat to ask questions, or you can also use the Q&A button at the bottom of Zoom if you're on Zoom. Obviously, if you're on Facebook Live, please do just ask in the chat, and we are monitoring both areas. So ask your questions away, whether it has to do with cash flow or it has to do with investing or anything in between and all over the place. Please do let us know. So there is a question here, and I'm going to pass it along to you. The question is from Victor, and he's asked, what do you think, where is the VC and PE industry headed post-COVID? Will impact investing be the new normal for VC funds?
Mm-hmm. No, appreciate the question, Victor. I think it's a good question. I think investors aren't immune to evaluating their own business model. So, investors are businesses as well. And I think it's caused, everyone across different industries to rethink, what the future will look like. I think, for VCs and PE firms and investors, I think, I think there will be a heightened sense of focus on business fundamentals. And kind of, as I mentioned, showing potential is kind of no longer good enough. You have to show proof. I think, in good times, there's probably a greater appetite to place an emphasis on growth, maybe even sometimes growth at all costs. If you're building a marketplace business, getting scale is very important. And so maybe you're spending ahead of growth. And so, as an investor, you're willing to tolerate higher burn to achieve higher growth in companies. I think what we see when there's kind of contractions in the market is the pendulum shifts more towards a greater emphasis on profitability as opposed to growth. And so understanding what is profitable growth, is maybe a slower growth rate is more favorable if you're able to drive greater profitability at the company. And so, different investors have different thesis, but I think what you'll see is a heightened sense and a heightened scrutiny on understanding, what is a profitable business model? At what point, at what scale can you become profitable? So maybe, saying you need to be $100 million top line is no longer appealing to investors if you need to be at that scale to first reach profitability. I think what you'll see is a greater emphasis on profitability. And so as a business, I recommend thinking through, what do your unit economics look like? And when I say that, I mean, what is your cost to acquire a customer? What is your variable sales and marketing spend versus how much value you'll derive from a customer over its lifetime? Sometimes I think, when growth is being prioritized, maybe you're spending $100 to acquire a customer and you're only anticipating $20 of revenue in their first year. And so that customer has to be on the platform for 5 years before they even turn profitable. I think what you'll see is there's less of an appetite for that and more of an appetite to see stronger economics from the get-go. So, you're acquiring for a customer for $100. How can you make sure, you're deriving $200 of value from that customer in year one, so the payback is shorter? So I think, a long-winded answer of saying, I think you'll see a heightened sense in terms of business fundamentals and understanding, the scale and the economics and how you can drive towards profitability, sooner. I think in terms of impact investing, I think that's largely a fund specific strategy. So I think we've definitely, over the last, call it, 10 years have seen this pretty significant increase in terms of funds that are strictly following an impact investing strategy. I think there are ways to support businesses that are, making profit and have social impact as a focus. But, I think what you'll see is that's largely dependent on a fund's strategy.
Right.
My guess is that, that definitely will be an area that continues to become popular. But I do think that there's a lot of companies that are just, privately funded bootstrap companies, or have already received venture capital fund that will still look for capital to grow. And so I also think there's no shortage of funds that will be focused on supporting the growth of private companies across a number of different industries. I think there are certain industries right now that we're seeing more activity, for example, around healthcare, that will be, kind of hot spaces, kind of productivity, working remotely, kind of productivity platforms as well. But my sense is that companies that are pursuing, impact as a strategy will continue to do so. But I think that will be decided at the fund level.
All right. Thank you. Thank you so much. And thank you for your question, Victor. We really, really appreciate it. Okay. So I was thinking about what you're saying around having strong economics, and what you were saying previously around nourishing your existing customers and focusing on that more. And I know things you've talked about before is that revenue from existing customers will be king, and that's something to focus on right now. And I'd be curious, a question we get a lot is that's all well and good, and I get it in theory, but what can I do today to, like, what's the first step I can take to nourish those existing customers and to start setting myself up success for those kind of strong economics you're talking about, so I can be positioned well when I am going to raise?
Yep. Yeah, I think, we all talk about this crystal ball, but if I had to look in my crystal ball, I do believe that, for the duration of this year, and I will say that companies are already starting to plan, into 2021 and longer term. But I think, tactically speaking, for the balance of this year, when I think about growth at companies and looking into the crystal ball, there's obviously exceptions to all of this. But I think, for many companies, growth will come from the existing customer base. And that's just, I think, it's much easier to grow share of wallet in someone who's already paying you money versus going out in this environment and trying to convince someone to spend new dollars with a vendor they have not worked with before. I think, many companies have instituted budget freezes for the time being. And I think as a company, if you've already made it through procurement process, you've already established a relationship with a company, that's incredibly, incredibly valuable. And so what I would kind of share, I think that will be a great place to focus on where to drive growth. And so, I think focusing on your existing customer base right now as a company is incredibly valuable. So, spend time to understand, how are companies using your product today? What do those usage metrics look like? Are people using it in the way it was originally intended when it was sold? Are different teams using it? And understanding kind of where they are getting the most benefit and where there are still pain points, because I think that creates opportunity to create more value for the customers. I will say that's kind of on the new business generation from your existing customer base. I think right now what is also really important is protecting your revenue and making sure those renewals are not canceled. And so, I think it's important for customers to be incredibly value add right now and see where they can go above and beyond for their customers. I think reputations are built in this environment. It's easy, customers, it's easy to be a good partner in good times, but how are you going to act in bad times? And I believe that will drive business in the future. And so, how can you maybe provide additional services? So if you sold a software and your customer service team or your account management team is sitting idle, are there value add services you can offer in terms of surfacing insights from the data you collect? Can you, provide additional insights or maybe consulting in terms of how companies can drive additional value from your product? And I think kind of surfacing some of that can be quite valuable to maybe uncovering those upsell opportunities, but also reminding the existing customer base, why they bought you in the first place and kind of the value that you're driving for their organization. And so, I think, being top of mind as a partner that can be helpful in this environment will go a long way.
Okay, great, thank you. So I'm gonna jump to another question that I get a lot in my pitch master classes, which is around also contextual around COVID and whatever it's called, where you are staying in place or lockdown or quarantine or de-escalation or wherever you happen to be. Even still, it has shifted kind of the relationship building piece of meeting investors and running your campaign. So I'd be curious to hear your thoughts on how to run your investment campaign remotely and what that could look like. Like, what's an example of, or have you seen that? Have you actually been in a situation where you haven't met a founder face to face that you've invested in or that your fund has?
Yeah, we have, and I don't think we ever envisioned that happening. I think all of the deals that I mentioned, we're closing all of our diligence. We conduct all of our diligence in-house, and part of our diligence is meeting with the management teams, having one-on-one meetings, understanding their strategic outlook for their respective business units. There's no substitute for building relationships, particularly a new relationship in person. I think is a hard thing to do, and it's harder to do that being remote. But that being said, we've done it. We've closed deals where the relationship and the rapport has been established remotely, and it definitely can be done. I think in terms of fundraising context, I'd say, a few things. So while it's harder, I think the flip side of that is you have a very captive audience with shelter in place and folks kind of not out and about. You have, I think what we're seeing, all of us are probably spending more time in front of a screen, more accessible, like welcome to chat to a friendly face when it's hard to not do that with others as we normally would. And so I think there are opportunities to really use this time to network. I think two pieces of information that I share even outside of COVID time, but I actually just think are so important. And I've used them as an operator. But just as you think about fundraising, time is everything. Time is a deal killer. You see that all the time in fundraising on both sides of the table. And so how can you, when you're in active fundraising discussions, how can you reduce the time to close? And so what I always recommend is when you're thinking about having fundraising conversations, always act like you're ready to close the deal and sign the deal as quickly as possible. So I say, you should never go into a fundraising conversation without having an updated data room. And what I mean by a data room is materials you can easily share with an investor that provides more information on your company. I think there's nothing that's more of a buzzkill when you as an investor, you have a great conversation with the company and you're excited, and you want to learn more, and you say, great, can you provide me maybe these 4 pieces of information, or can you share some more metrics on your company? And you don't hear back, because what happens is the company doesn't have that data pulled. They don't have it ready to go. And so a week passes, 2 weeks pass, and you kind of lose the enthusiasm. And as a company, you really want to capitalize on that momentum. So I'd say have the 5, 8, 10 files that you think are really important ready to go. So probably a forecast model, a customer list, maybe revenue by customer over time, a product roadmap. Have those things when you're about to kick off fundraising ready to go so you can easily share them. It also allows you to create the narrative. You're being proactive in how you're positioning information, how you're communicating your story, and you're guiding the investors through the narrative and how you think about your business. And I think having that information, it's really powerful to have a good conversation with an investor. You hang up the phone, and an hour later you send them a whole kind of chunk of information that they can go through, and you capitalize on that good conversation that you've had and you keep the deal moving. So I always say be prepared, have that information ready to go. It's also just good, I think, good governance from a company perspective, that you're always looking at your metrics. You know what is trending good, where are the weak spots. You're going to get asked questions. So I also just think it's good to have that information prepared. And I think that helps, especially being remote, to kind of capitalize when you have someone's attention, kind of capitalize on that. The other key piece of information that I'd share, that I found to be helpful on both sides of the table is stay in constant communication throughout a process with your investor. As I mentioned, you want to keep people engaged. You want to keep people, excited about the business. So when I was raising capital at my other two companies, and, I was having investor discussions, I would kind of, think about you don't want to over communicate and be annoying, but how do you keep people excited about your business, wanting to learn more, wanting them to think about an investment. And so, for example, at ZocDoc, we'd be having investor conversations. Maybe we hadn't chatted in a week and I wanted to drive some engagement. I'd send the investors a note saying, just wanted to let you know, we signed our largest deal in the company's history, kind of show positive momentum. It took us, the time to close this deal was shorter than in the previous quarter. The deal size is larger than the last deal we kind of signed. And what are, it might seem small in your head, but to someone who doesn't really know your business, what are some positive green shoots that you can communicate that keeps the dialogue going? So really think about driving engagement through communicating the positive things that you're seeing in the business. For you, it's probably more mundane, but when you're thinking about what other people might be interested in, it goes a long way.
Yeah. I've been hearing a lot recently about instead of just communicating milestones, to find a way to communicate momentum, which you just mentioned momentum. So that really kind of signaled my brain. I've been hearing that a lot, and talking to people about how you can show that momentum. And what I'm hearing is it doesn't have to be big, extraordinary things happening, but just showing that the business is moving forward. Is that correct?
Yeah, for sure. I mean, it doesn't have to be, you want to communicate things that are valuable. I think there's nothing more, I think we can all attest, there's nothing more annoying than getting an email that doesn't really say anything. But even, if you haven't heard from someone, how can you nudge them in an effective way? I know, Melanie, storytelling is near and dear to your heart. And I really think about fundraising is a big part of it, is, making people understand your company, understand the trajectory, and that's effective communication. And so, maybe instead of shooting off an email, hey, following up if you've had a chance to review the data room or review the materials, how can you tie in, oh, by the way, we've just, sold, or, this new product is in beta, our engineers just created a major milestone and we're piloting with a customer, and we've seen the engagement on this new product be much higher than we anticipated. Even something like that in a kind of more traditional nudge email can really re-pique people's interest and kind of drive reinvigorated engagement.
Right. Thank you. That's great. I just lost my train of thought. I was thinking about the crystal ball piece, because I know everyone's saying I can't look into a crystal ball, but obviously us as entrepreneurs, we also can't look into a crystal ball. And a conversation you and I have had before. And actually, just before I ask the question, I will say we only have time for one, maybe two more questions. So if you have any questions for Kathleen, to get those in now. But I wanted to ask around, if I don't have a crystal ball at this point in time and I'm trying to preserve capital, as you were suggesting, I feel like, and I know you have spoken to how there's kind of a war between, should I be preparing for a second wave or should I be investing? And can you give any kind of nuggets of wisdom on that, please?
Yeah, maybe I know we're kind of running short on time, but something that's also near and dear to my heart is, you want to preserve capital in this environment. You probably want to have at least 12 months of runway, and you need to make sure your company's going to be around, and making sure you have enough capital to do that is definitely a priority. But I think what I also worry about is potentially over indexing too much, and too drastic of cuts. And why I worry about that is, in a recovery, you're not ready to go hit the ground boots running. You have to go back and rehire people. You have to go back and kind of reverse some of the cuts that you did. And that takes time, and I do very much think of it of a balance, right? You need to make sure you're around, and I get that, but you also don't want to kind of overcut. And so, I think, a lot of people have been talking about, how do you cut the fat but build muscle? And so I think it's really understanding, for example, where can you make changes that don't necessarily completely hamstring you over the long term? And so, I think part of that is, I think investment where the ROI is valuable. So for example, if you can hire a salesperson and they can be productive in 3 months, and you have data points that support that your sales team is still able to sell in this environment, I think that would be an investment. You say, okay, it's going to take a salesperson 3 months to get ramped up, but I have visibility that I should be able to make them a productive rep. I think maybe you continue to invest in that area of the business where you have a very clear view into return on that investment. And so I think it's balanced, but something that you should be cognizant of. Maybe I'll say, one interesting area that I think that gets overlooked in terms of how you can extend runway, how you can preserve cash and fund your business in this environment. I think a lot of folks have been talking about, cutting costs. This isn't applicable to all businesses, and some businesses aren't able to do this in environment. But one area that I think is really interesting to think about is how your business can essentially fund itself. And what I mean by that is looking at the working capital. So for example, are you able to sell multi-year contracts to your customers where they're paying a piece of that contract up front? How can you pull cash into your business today, where you can use that capital to then grow your business? So for example, if you have historically sold annual contracts, but you are on monthly payment terms, maybe $1,000 contract, you're collecting $100, or, kind of you're collecting a piece of that every month. How do you maybe change to annual payment terms so you get that $1,000 up front, and you really use that capital to extend the runway of your business? So I think there are very traditional ways you can look to preserve capital for sure. But I think there are other maybe business fundamentals that if you're able to this environment tweak payment terms or contract lengths, there are favorable working capital trends that can also help extend runway.
Okay, thank you. I've taken so many notes here. It's fantastic. I have lots of kind of good nuggets and just like even things to think about, like you're talking about when you're updating your data room, even specifics there. So I'll make sure to capture all this and in some sort of a written way so people can actually see these really great nuggets of how to prepare, preserve, and kind of adjust mindset at this time. So really appreciate it. So, but before I wrap up, I just wanted to ask also if you had any kind of remaining thoughts, if you have any advice that you have been, questions you've been hearing a lot, or advice that you really want to give entrepreneurs today, or any other crystal ball projections for your own life and what you think it's going to look like.
Yeah. I mean, I think the biggest thing is, this is a great opportunity to really get to know your business and really get to know the fundamentals. I think, when you're in hyper growth mode, you don't have the luxury of really diving into the metrics and understanding the sensitivities to your business and the different levers and the impact to those levers. And so I think as an operator, right now, spend the time to really understand your business. I think as an operator, you're most powerful when you understand what's working, where you have the most upside, but also, where are the risks in your business? You have the time right now to think how you're going to mitigate those risks. If churn has been high, why is that? What are the 3 things that you can do to lower churn? Do you have the infrastructure even in place to measure that? And I think, spending time to kind of really understand the fundamentals and kind of any blind spots is can be really powerful. I think, you know, having the confidence that kind of you know what's lurking in the closet as an entrepreneur, I think gives you the confidence to really go and execute and deploy capital against your business. When you understand the fundamentals really well, I think it makes you, you know, quite confident. And I think that goes a long way.
All right. Thank you so much. Okay, so if I were to summarize all this, I really did take a bunch of notes, and I think like really highlights for me, and forgive me if I missed something, throw something if I missed a highlight that you want captured here. But from what I heard, and I'm hearing this over and over again, so I think it's really important to state once more, is that in crisis there's opportunity, as you said, and that it can be a catalyst for change. And even just now you're saying it's an opportunity in so many different ways, including this time it's kind of a, I'd like to say gift of time, except for I'm sure every single entrepreneur is also super, super busy right now and pulling the weird hours and, you know, not really gift of time, but a shift in priorities maybe, and a time to get to know your business fundamentals. And then you touched on that quite a bit as well, around what's going on in investors' minds right now, and that there's kind of this heightened focus on business fundamentals and to focus on proof and profitability, whereas we may have focused on scaling in the past. So I really appreciated that. And then like, I think there's a really good conversation around preserving runway, but to do so in creative ways. And you talked about like partnerships, and you talked about different ways that you can do this. And I also took a note that I can no longer read, but aside from that,
I hate when that happens.
It's like, what does it say? Look at why capital is what it says. I don't know, but either way,
there are creative ways, whether that's deferring comp, changing it from cash to equity, looking at how your business can provide capital. Yeah, I think you're right, and that the key takeaway is be creative in terms of how you can preserve capital.
Yeah, I love it. All right, thank you so much. I'm just gonna throw up. I'm going to throw the slide up again so everyone can see your contact information if they want to get a hold of you. I'm going to throw that on the screen just now so you can see that, everyone. So I want to thank everyone who has joined us here in the Zoom room, as well as on Facebook, and anyone who joins us in YouTube and on Facebook in the future, whether you're here live with us or not. We really appreciate you being here. Feel free to send your questions at any time for Kathleen, and I will pass them along. I also really want to take a moment to thank Kathleen for the time that you put into this. I know you put a lot of time and effort to really think about what you wanted to convey, and I really, really appreciate that so much. And I think this is a topic that is it's constantly of interest. It's something that's always really relevant, whether it's COVID times or not. But I know there's as you said, there's so much uncertainty right now, and so it becomes even more scary when we're looking into a crystal ball that we cannot see anything in, or super cloudy. So everyone, Kathleen is incredible. Please do reach out to her. You can find her on LinkedIn. You can find her on Pick My Brain. Really just a pleasure to talk to, both here live in Zoom, but also we've had a chance to talk recently, and it was a pleasure. So I really appreciate that so much.
Thanks so much.
Yeah.
Appreciate everyone's time, and as Melanie mentioned, if there's questions, feel free to reach out to us and the other Volition advisors as well. Quite a deep bench of experts to help navigate these times.
Amazing. Cool. Thank you so much. All right, everyone. It's very good seeing you, and we will see you next time. Bye.
Bye.